you ready? Are you ready? Are you ready? Let's go.
Welcome to Unpacking the Home Advantage. My podcast is to help you understand the mortgage loan side through my experience and knowledge. My name is Paige Ashby. In this episode, we're going to talk about updated guidelines that you need to know about, how it affects your loan, and some good news on loan amounts. Let's get unpacking. Have you noticed that your rate is higher as a strong borrower? There have been changes for the worse if you have excellent credit score and have more money down. Yes, you heard me right. This change is called LLPA, Loan Level Price Adjustments. LLPAs are adjustments to the price of a mortgage that compensate for risk. These fees vary based on factors such as credit score, loan to value, and property type. So for an 860 or above credit score, with 15 to 20% down, your rate's going to be higher. But I have a solution. The solution here is called recasting. If you have 20% down, I usually have my client keep that full amount aside. You would have to put only 5% down and then get the loan closed. You will get the best rate. Yes, putting 5% down will give you a better rate. So once you close, you can make two payments, your first two payments. Then what you do is you call your mortgage company and request a recasting of the balance. This is when you can apply the rest of the 20% down towards principal. So with a lower down payment, you are getting a lower rate. And now after the recasting, your loan amount is where you want to be from the start. So this is how you get around the change. So definitely consult with the lender on recasting, but I do believe you do have to make your first two payments on it. The next change I want to talk about is loan limit changes. So as you notice, every year the loan limit has increased. For next year, 2024, the conventional loan limit will increase to $750 from $726,200. And most of the lenders are actually allowing this loan limit already. So, even though we're a couple months away, you are allowed to use the $750 as a conventional loan limit. And I do believe the VA also is honoring this. We have not heard anything from FHA, but usually they follow afterwards. So once I hear anything on that, I will let you guys know. Now, the other change is self-employed borrowers. On the conventional side, self-employed is usually harder to qualify because you have to use tax returns. 2 years is usually what is allowed on Fannie Mae. So there's Fannie Mae and Freddie Mac. Freddie Mac allowed you to use 1 year tax returns if you have 5 years of self-employed history. Fannie Mae did not. They still required 2 years. So the change for next year is going to be on Fannie Mae. They are going to follow the Freddie Mac rule, which is if you have 5 years of self-employed history, you are allowed to use 1 year tax returns. So this can save a lot of you guys, because if you average the 2 years and the previous year you took a loss, then we average it. We don't use the current year if you made more money. So this is definitely an advantage to the self-employed community. If you have 5-year history and you did well in 2023, then you can use the 2023 taxes once those are done for the following year instead of averaging the 2 previous years. So good news there, and please reach out to me if you guys need anything, and if I can help in any way, I would love to hear any ideas that you guys want me to go over. If you have enjoyed this information, make sure you follow, and if you have anyone that can benefit, please share. More episodes to come. As an active mortgage broker and mentor, if you have any questions or need a pre-qualification, you can reach me through LinkedIn. Paige Ashby Lending, or my other contact information are listed in my episodes. Thank you for being part of Unpacking the Home Advantage.